I know you've heard this 1,000 times. Sell in May and go away. Is this folklore, myth, or an investing strategy that you should use in your portfolio? Well, today we break down, is this still a strategy that you can use in modern day investing? Let's chop. You heard a lot about sell in May and go away on your TV, radio, and newspapers, but is it real? Is it myth? Is it legend? Is it a strategy that you can use? We'll use some real Wall Street data and some empirical data as from some studies to really break it down and see if it's real or not and something that you should participate in. Hi, I'm Dr. Preston Cherry, founder and CEO of Concurrent Wealth Management, where we help you align your life and money to help you live your wealth your way. And if you like what you see, hear, and feel on the show, just like and subscribe and share with your family, friends, and colleagues. All right, let's chop. Let's get into the origin point of the sell in May and go away. What the heck did it come from, right? Well, sell in May and go away came from a phrase that in London, the London horse race. So sell in May and go away, come back on St. Leger's Day. St. Leger's is a horse race that happens in September. Also, too, there's also in the U.S. side, folks have summer times and people, are investing on the first half of the year. And then in the middle, they are going away for the summer. And then on the back half, they are coming back and paying attention more to their portfolios. So these two mind frames or thought processes or kind of fuel the sell in May and go away thought process. And also there was a study in 2002 by Bowman and Jacobson that's analyzed stock markets in various countries, 37 to be exact, and analyzed the periods between November and April and May and October. And it came to find, the study found that the period between November and April performed twice as high as the time periods between May and October. There's also some data on the Dow Jones from 1950 to 2013 that compares May and October to November and April. May and October, 0.3% on the positive side, and November to April, 7.5%. So with those type of numbers, folks were thinking they found a secret market timing mechanism that helped their portfolios. Well, when you dig a little deeper, this is not the case, particularly when nowadays there is a lot more information in the market and there's not as big as information gaps as there were pre-2000 and pre-big data, the algorithms. So nowadays, there's so much information in the market that the information gaps are closed, such that trying to take advantage of something as folks going away during the summer and lower volatility, this just doesn't exist nowadays in the current fast-moving markets and with all the data floating around. Even Warren Buffett said there's a little luck on his side because back in his day, when he first started trading, there was a larger information gap back in those days than there was today. Now, of course, he was still successful during his time, but it was easier during the times before big data and algorithms. And even such today, when we're talking about sell in May and go away, those information gaps have such closed. And market timing in general just doesn't work when compared to being consistently invested. So let's switch gears and see if this seasonal marketing trend still exists. Now, it did for a while. The study was legit, right? Now, more studies have come out and revisited this sell in May and go away seasonal trading pattern, and it's eroded over time. Again, big data and algorithms. For example, there was a study in 2015 by partners Dichtel and Dorbitz, and just looked at this strategy and said there was really no statistical reliability in the pattern showing up over and over again and the statistical advantage of sell in May and go away. Also, when you look at data using the S&P 500, dating from 2000 to 2023, if you compare two strategies where you invest $100,000 into the S&P, stay invested for those 23 years, that grows to about $310,000 compared to a sell in May and go away strategy. That $100,000 ends up being about $225,000. So that's a big difference of $95,000 to try and time the market. Nobody knows the highest days or the worst days. So trying to time those is a lost cause more often than not. And while we're on the topic of selling in May and go away, does it still work? And it doesn't, as we've looked at the patterns over time. What can you do around, May time, right? You can rebalance at the end of the year, tax loss harvest in your brokerage accounts and, or even all across your investing accounts, which is bringing your accounts back into an allocation that matches your risk tolerance and profile and goals. So May be a good time to do that as well. You don't always have to wait until the end of the year. At Concurrent Wealth Management, we help our clients a couple of times a year look at their portfolio and see if their allocations are fit their allocation targets, which is a good pivot on what you should be doing around the May time, right? So you don't want to check your portfolio all the time. that triggers behavioral finance, bad habits like selling at the wrong time, selling low and buying high all the time and trying to market time. But having scheduled look at your portfolios does help you with opportunistic investing in your satellite portfolio. It helps with, as mentioned, tax gain and tax loss harvesting. It also helps with taking advantage of lower volatility in the summer where perhaps you can do some Roth conversions during this time. So a lot of other activities that you can take advantage of rather than selling away and going away in May and going to some horse race in London or waiting for people to come back from their summer vacation. Lots of opportunity to take advantage of opportunities they may be laying out there, rebalancing your portfolio or some other tax strategies. Get to planning, right? Instead of waiting until the last minute or the end of the year. All right. That's what I got for you. If you want to take a deeper dive into this topic, jump on over to the Concurrent Wealth blog, and we got a lot more detail in that article. All right. As usual, if you like what you see, hear, and feel on the show, please like and subscribe and share with your family, friends, and colleagues. And until next time, we'll chop soon. Cheers.